Hey everybody, and welcome back to Fly Kiwi. We're going to get into New Zealand economy, a doom or boom. So just a quick apology. Previous videos, the audio was not set up properly, and so I have removed those videos, and we're starting afresh. So this is our first video, really. New Zealand economy, doom or boom. Let's get straight into it. Don't forget to subscribe, like, share, hit the bell, and leave your comments and share the channel around. Hopefully this fills a bit of a gap on YouTube around New Zealand economy, which we're mostly going to focus on economy and politics. So should be pretty fun. All right, let's kick it off here. So here we are. We've got a chart of New Zealand interest rates. As you guys know, particularly if you've got a mortgage and you've recently refinanced over the last 5 years, the interest rates are really low for the wholesale bank. And it's a big key determinant of New Zealand retail interest rates for mortgages. And it was sitting down at 0.25% all the way through to September 2021. It was only 0.25%, which is very, very low. So that means banks could offer rates in the 2 to 3% range, which is pretty neat. Now, obviously, that was the late phase of COVID, the lockdowns, the Labor government period. And then rates started to rise, right? So the central bank in New Zealand started raising interest rates to deal with high inflation, right? Now, rates were very aggressive, and that can face a lot of criticism. So that's a different topic. But you could see that interest rates rallied all the way from 0.25% all the way up to 5.5%. So if you add, say, around about 2.5% on top of that, that's kind of your retail rates, right? So 5.5 add 2.5 to that. You're getting up into the high 8s, 9% marks, right, for retail rates, and so it's pretty high. Obviously, there's floating and variable, but that's kind of the mark that you're at for variable. That sort of held around from May 24 all the way in to August 24 before we started getting a reprieve, and it started going down slowly and surely from 5.5, currently at 4.25% on the wholesale rates. And we've seen some of the retail rates come down just a little bit, ASB and other interest rates coming down. And so we've got the next central bank meeting on the 19th of February, which I think is tomorrow. And we're expecting maybe a 50 basis rate cut then. That would get us to 3.75. And then maybe we'll have another 25 basis point cut after that. Probably get us down to about 3.5% on the wholesale rate. So that might bring in retail rates down to, maybe 5.5% to 6%, somewhere in there. So pretty interesting. Now, that is the interest rates are very aggressive, and it's helped with inflation very bluntly, but it's also been damaging to the New Zealand economy and contributing to the weakening of the exchange rate as well. So let's jump from the interest rates from the wholesale bank into New Zealand inflation. Inflation is what you have to deal with your household budget, with your business investments, all that sort of stuff. Really does affect everybody. And the annual inflation rate, as you can see, it started to really accelerate, even as interest rates were going up. It topped out in 2022 at 7.3% in the second quarter. So that's between March and June 2022. So if we go back to the interest rates between March and June 2022, we can see the interest rates were still climbing at that stage, up around 2%. So inflation was still carried away there as well. Now, obviously, the Labor government was doing a lot of spending, adding a ton of spending and debt to New Zealand, and also had their business scheme going as well during lockdowns and things like that. And of course, that's all pretty controversial, and the outcomes have been pretty widespread. But that's another video too. But anyway, we got up to inflation to 7.3%. By Q2 2022, so that's March to June, and that's 7.3, very high, and so it's like a big tax on the household, on Kiwis in New Zealand, and so had to be dealt with. But of course, the interest rates were pretty brutal to get us there, and of course that held up all the way through to the end of 2022, 7.2%, and then of course we started to move down, and of course we had a change of government into the national coalition there with New Zealand First and ACT. We're now down at 2.2%. We've been that way since Q3 and Q4 24, so between July and December last year. And of course, we're now mid-February, right? So 2025. So we're going to be following the inflation. We'll probably have another inflation point coming up very soon after the central bank gives us an update. But that's kind of where we are, 2.2%, which is pretty good range. Now, we've got a central bank has a range between 1% and 3%. So we're sitting pretty much right in the bang middle there, which is pretty good, 2.2. But here's the problem. The problem is that we've got inflation on a household is accumulative, right? So you add up all these accumulative percentages, and that's how much more expensive things have got since 2021. So very, very expensive, and a lot of people are struggling in New Zealand to deal with that accumulated inflation on prices from everything you can possibly imagine. Eggs, dairy, any dairy, meats, they've gone through the roof, as well as a lot of other commodities there. So that is the New Zealand inflation. So yeah, high interest rates to deal with high inflation, but pretty brutal and to some degree controversial as well. And then, of course, what's happened to that? It's it's got inflation down, so it's good for the household. Household still inflation, accumulated inflation, but the economy's gone into technical recession. What's technical recession? Well, it's 2 quarters. That's a 2 times 3 months period, so 6 months where you've got negative GDP growth. So the economy is actually shrinking. So we've had that for the last 2 quarters, negative 1.1 and negative 1% for the second half of last year, which is pretty bad. Now, we've already been there in 22 and 23 at the end and the beginning of that, but that's pretty bad. And you can see actually the New Zealand economy not performing very well at all. Last time we had a decent time was Q3 2020, and that would have been with a lot of government stimulus, and that was following a very low period as well than the prior quarter during this COVID period here. Now, so we've had this negative, so New Zealand economy performing pretty badly. And of course, will it get worse? That's the question. Doom or boom? Doom or boom? That's the question. Now, let's quickly go into the next one, unemployment. So obviously, the economy's been hit, but so has unemployment. So unemployment there is risen to 5.1%, which is pretty crazy. And so that's like 7,000 people to 156,000 people now unemployed. So that's pretty crazy. And so here we are with over 5.1%, and that's getting high now, right? Getting high. Typically, full employment you might consider around 2 to 3%. So we're definitely getting up there, and this despite record immigration. We've got tons of record immigration flooding the country. Typically, a lot of it is very low skilled, and so they're all the competition and employment's going up as well. So pretty brutal out there. So you're facing higher costs. And you're also, if you're looking for a job, you're competing with a lot of low skilled jobs there, and you're probably okay if you're pretty high skilled, but if you're not, then you're going to be competing with a lot of people flooding in, not just Kiwis, but foreigners coming into the country as well at record levels. I mean, these are huge numbers. We're going to do a video on that all by itself. All right, so that is unemployment. So not looking too good on the economy, looking too good on employment. And that brings us into confidence. There is still confidence in the market through the ANZ Business Index. So it's still looking pretty good. But look, it is slipping. We were all the way up at 65, and now we're at 50, right? So 65, now we're at 50. So, it is pulling back. Will this fall dramatically? I kind of feel it's going to fall back dramatically, but that's more of an outlook video. We're kind of just looking at the New Zealand economy, doom or boom. But that's a little bit of a worry right now. I feel a sentiment change. So we're going to continue to watch that number. Now let's jump over to consumer confidence. We're talking about business confidence, consumer confidence. Now this is very important with demand in the economy, right? So you have supply, you have demand. This is very important for demand. And we still see that we're really off the record highs back in 2021. Where we were still coming off pretty good confidence for the consumer. But we've definitely, we bottomed out here in Q2 2022. And you got to remember, this is really, lockdowns and all this other stuff was really putting negative drag on the society. And of course, confidence is one of those, right? So one of those metrics of people that get affected. And so, but we have had a bit of a pickup, 97.5 points at the moment. So, it's the increase is attributed to easing financial pressures, lower inflation, and declining mortgage rates. So those things, definitely giving a bit of a pickup now. This is just in consumer confidence. So we'll see how much that translates into demand as well. All right, so let's jump over from that to New Zealand population, as I said, New Zealand population is exploding. We're looking up to 5.3. This is on the this is on a yearly basis. This chart, 5.3 up to 5.3 million. Just remember, only back in 2013 we were at 4.47 million. So we are growing at a huge pace, and it's only accelerating because immigration is at horrendous levels. I mean, they are just crazy levels, and like I say, pretty crazy. And they're going to have many negative impacts on New Zealand economy. As you see, unemployment's going up, and you're flooding the country with people. And of course, they're non-Kiwis, right? They're not Kiwis, they're foreigners. So, and they're low skilled, particularly low skilled. So that's just going to create more problems in New Zealand with the utilities, etc. It's a huge impacts just about every part of society. So we were pretty much 2022. We're at 5.16 million, and then we've jumped to 5.3 million. I mean, this is crazy stuff. So we've got a really bad economy, and now we're flooding the country with people, and you've got to house them and feed them and all the rest of it. You've got utilities, and so what happens is this will pull forward a lot of utility capital costs and make it very expensive. So people will definitely notice that in the years ahead and the months ahead. I mean, it's just going to be crazy. So this is pretty crazy stuff. This is the worst decision you could possibly make at this time in the New Zealand economy. So let's see where that plays out. Now, moving to average hourly wages, they've been slowly creeping up, so helping to keep adjustment there. We're looking at $42.64 at the end of last year is the average New Zealand dollar hourly rate there. So, it's slowly picking up. This is helping to keep, a little bit up with inflation. We were at $42, previous year we were down at $41. So you're at $42.60. But remember, accumulated inflation was so high, even with these slight wage increases on average. So let's move over to productivity. Productivity in New Zealand, big problem. Productivity decreased to 126 points here. So we're looking at this candle here, Q4 2023. The data is a little bit old there. But it has been a struggle, and this is definitely one area of improvement, productivity, to improve that, to add to GDP and welfare, right? So let's move on from there. New Zealand current account deficit. Obviously, New Zealand's a big exporter. We're a little island, or a couple group of islands down at the bottom of the South Pacific. And of course, we have some incredible agriculture that's really the backbone of the country. Has been under attack recently by the Labour government. And of course, national government also actually got it under a bit of pressure and attack as well. So we'll see. Hopefully, it fares well despite that, government oppression. We've certainly seen some big farms being folded in versus climate change policies, which is if you get rid of all your food, you're pretty much screwed, right? And we've seen that in socialist countries. So hopefully, we don't get to that point because that's pretty bad. Also, it's a big net exporter, right? One of our biggest exporters. So New Zealand record current account deficit of 6.9%. So we've definitely we've got exports are less than imports, and so we're negative to GDP as well. So it's pretty bad there. Not good sign. In addition to everything else, because you got to it's accumulated debt, right? You got to pay for that. So let's jump over to what New Zealand exports looks like. Typically, we're dominated by dairy products, eggs, honey, etc. Meat, of course. So everyone's pretty familiar with that. New Zealand is a big giant farm, and we cover about 2 to 3% of world's exports. The last time I checked of food, so it's a big part of the world's market as well as our big export earner. And we have pretty much, I think, the best farmers in the world. Certainly, we have in the past. And great land for farming, right? So that's kind of where we are. We've also got a lot of wood products as well. That's obviously been up and down depending on the prices of wood and things like that over the decades. Obviously, a lot of fruits. We've got a lot of that. A lot of wines and beer. We obviously have lots of orchards and vineyards. We obviously got a lot of dairy, so we have flour and milk and a lot of harvest there as well. So that's sort of some of the main stuff that we have. We do export some machinery and a few more other things like aluminium from TY Smelter. We have like 6 major industries in New Zealand, so it's one of those. Now we're going to jump over to imports. On the import side, we obviously import a lot of fuel, and we obviously import a lot of vehicles and transport machines, railways, trams, and things like that. Obviously, we don't do nuclear reactors. New Zealand's got barriers to that, but we do import machinery, electronic components, obviously a big deal there. So those are our big things that we import there. obviously we also do a lot of medicals, plastics, and pharmaceuticals, aircrafts, and things like that. So those are some of the big imports there that we do. Just to give you an idea of exports and imports. And then, of course, foreign direct investment's been a real problem. And we've gotten, negative in the last quarter, Q3 2024 is the last data point here, at $2.4 billion. So pretty negative there, despite having some good months, good quarters before that in 2023. So pretty negative outlook there. And of course, we've seen the Prime Minister talk about direct investment. So we're going to watch a quick video of that before we wrap up this New Zealand economy doom or boom.
Billions of dollars in capital out there that investors are looking to find a home for. And investors have the potential to provide jobs for Kiwis, to lift our incomes by supporting new businesses and investing in the existing ones that are thirsty for capital injection to leverage growth. So today I am very pleased to announce the next step in our comprehensive plan to turbocharge the New Zealand economy. The government will modernise the Active Investor Plus visa to encourage more foreign investment into New Zealand. We're dusting off the welcome mat and we're rolling it back out by making it simpler and by making it easier to invest in this country. And so from the 1st of April this year, we will introduce 2 new investment categories under the Active Investor Plus visa. I wanted to call them ambitious and really ambitious, but we've settled on the names of growth and balanced. And in the growth category, we're going to focus on higher risk investments, including direct investments into New Zealand businesses or managed funds with a minimum investment of $5 million. And in the balance category, we will actually target lower risk investments, but with a minimum investment of $10 million. So today, again, I declare that New Zealand is open for business and investment, and this is a government that's going to say yes to growth, yes to opportunity, and yes to a much more prosperous future for all New Zealanders.
So that's the Prime Minister Luxon there, opening up more ability for capital to come in to New Zealand. Now, it's obviously a question mark there to see how that performs. So we'll be looking at how that contributes in terms of investment. You basically either have domestic savings investments or you bring in foreign investment and savings. And of course, we can see that's been pretty negative in the last quarter there, as based on Q3 2024. Now it's going to bring us into the tourist arrivals. Obviously, besides agricultural, tourism is huge. And of course, that's a domestic. It's not something we typically export, but it's domestic. The number of New Zealand visitors in New Zealand soared 12.2% year on year to 469,842. This is an area, is the low-hanging fruit. This is the area we can expand very quickly and get a lot of money in that way. So there's lots of different things you could tweak here. The numbers, the quality of tourist events, the locations, the internal investment in New Zealand for stuff like that. And of course, we've got a pretty cheap exchange rate at the moment because of our weak economy. It's about 67 cents for the Americans, right? So it's pretty cheap there. Yeah, that is where we are at the moment. And it's a nice little rebound here, right? Nice little rebound here. Looking pretty good. So a lot of them are coming from Australia, United States, United Kingdom, Germany, China, Japan. So all of those high income tourists. So that's what we want to get more of those. And that's a good way of helping us get out of the doom that we really are in at the moment. That is on the tourism. And tourism revenues definitely have fallen off. So even though we've got more tourists, the revenue amount's fallen off. So we've got a lot of work to do there, get them to spend more and get those dollars up. And although we are up on the previous quarter in 2023, it is having some impact there. But we definitely want to get some pretty good income into 2025, which so we'll see how much we actually got once that data comes in for the end of March this year, and see if we bid out $5.4 billion, and we can start really, getting the tourism to contribute more, get us out of the doom that we are in at the moment. So, some relief with inflation, interest rates coming down. Hopefully that will turn things around later in the year, get more investment in as well. That's hopefully that will play out too. But otherwise, we're facing high unemployment, negative GDP growth. So there's less pie to go around, and so we are really in the doom at the moment. Can the National Coalition get enough ideas and enough momentum to get the country out of it? Obviously, they've been trying to do trade agreements, get foreign investment in, but what else have they got up the sleeve? What else can they do to lift New Zealand's economy? That's a video for another another video. That's top for another video. Probably do New Zealand's economic outlook and do that. Hope you guys enjoyed this one, and catch you on the next one. Bye for now.